Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Abbott India, which has firm fundamentals and it can be a long-term portfolio kind of a stock. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about India, here's small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time, and you can ask me one query a day. And if you pay for 10 months, that's $100 straight away, then you get 12 months access, so that's 25% free that you're getting. For detailed market or company talk or one-on-one discussion you want on stocks, you can directly contact me on email and we can work things out with a fee. Now about the company, present in India since 1944, Abbott provides some medical solutions across the board into various segments, especially into, you can say, critical care and in diseases such as diabetes, etc. Provides cardiovascular, diabetes, diagnostics, nutrition, as well as pharmaceutical products. And it exports globally to around 170 countries. So one of the largest MNC pharma company, and that is listed here in India. Market leader in the blood screening, adult nutrition, and pediatric nutrition division, and that is where they are gaining a lot of traction, and that is where they make a lot of revenues and profits, especially pediatric nutrition. You would understand that anything related with children sells a lot if it is of best quality, and people then get a liking to it and become more loyal towards it, and that's where the numbers are coming through for Abbott over the years. Some of its brands include Pediasure, which most of you being parents would understand. Then the other products that they have is Brufen and Ensure Diabetic, and Ensure is something that is being provided as supplements for a lot of patients who are not able to eat at elderly age, who are not able to consume other sort of products. So that is also high in demand. So that's where major chunk of the money is coming from for Abbott. If you look at the financials, and I've taken Q3 numbers because this presentation was made earlier, so sales went up by 1.7% and profit dipped by around 5%, and that's why the stock did not move a lot post numbers or before that, because there was murmuring of a number that would be subdued, but very rare to see such subdued numbers, and these are opportunities then to buy into the stock on such results. High promoter and institutional holding with only 16% free float, and the stock is very stable, something that can be bought at, can be slept over for years, and you'll make money. An ROE of 26% is exceptional in this kind of a business in a competitive market. Operating profit margin of 22% and is improving. So things are looking good for the company. Yes, 1 or 2 quarters here and there can be up and down. If you look at the performance, then stock has been in an up move for the last 5 years. So I'm not taking into consideration the last 1.5 years. There have been consolidation, and these type of stocks like Abbott, Sanofi, Nestle, HUL, etc. These companies go through a lot of consolidation, whether it's Britannia even. And so you need to have patience to just ride through those consolidations. Rather than major declines, they go through consolidations, and then 1 year after probably after 6-8 months of consolidation, next year could end up being very big. So that is the thing. Market cap has continuously gone up if you take into account 2-3 year periods, and market cap has swelled to 35,000 crores, making it a larger mid cap company. It has been a consistent gainer over the last decade, and these are the kind of stocks that could be bought for 6, 8, 10 years, and not just for, you can say, 1 or 2 years, or can be traded upon. Extremely hard to trade such stocks. It currently trades at 60 times, slightly stretched, but most of the MNC pharma companies are expensive, so take that into note. And 1 quarter of downturn has meant that the PE has gone up slightly. Two good quarters would mean that the PE would reduce. So in that regard, I believe the performance of the company has been pretty good, and numbers have been solid. Apart from one or two quarters here and there, numbers have been very decent, and margins have been pretty good. Now, if you look at the technicals, there's strong long-term support around the 15,000 levels, which is around the 200 DMA 15,000. So if you get it around 15,500, 15,800, go ahead and buy. Has come to attractive levels. Even at these levels you can buy, and then on dips to the levels that I have just mentioned. And huge up move is expected above 17,000, 17,500 once it gets past that. So my verdict on the stock is that you can buy for long term even at these levels and on declines. Keep track of global events and how the business is doing globally. If there are any, so if you look at any threats, that if there are any litigations, then there is trouble for the company. Otherwise, the company will keep on gaining traction on the numbers front, because people will be more keen to buying into healthcare products and taking care of their health. Have a good 5-7 year time frame, and the returns would be quite meaningful. So this was my video on Abbott. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.